three down days of death have shown up on the stock market. Now we've got a massive 24 hours ahead of us with Bitcoin also pumping to $67,000, and it could potentially be sealing the deal for the next leg to the upside. But it's not going to happen straight away, and I'll show you why in today's video, along with the economic data, the stock markets, and some altcoins. Make sure you hit that like button. Here, GameSwing indicator, we turn on the settings, go to the bottom here, show bar type, and that brings up these little triangles, reds and greens, and then blue diamonds and gray circles. What does this all mean? Well, if we get three lower highs and lower lows from a significant peak, we could potentially expect that the market is going to remain in a correction longer than previous corrections. Doesn't always have to happen that way, but just looking at the probabilities, that's what we would come to expect, that there's going to be a higher chance that this might be a longer correction. Now, we've looked at seasonality as well on the channel, with July being a potential time that we get a trading range. Maybe it does go a little bit higher and then come back into the trading range, but essentially around this time, maybe we do get a bit of a grind sideways until we get towards the election later in the year. Now, in terms of the previous signals, this one did not have a 3 days down, but it was under the previous top for about 44 days. We can go back to the previous time before that, where we had 3 days down. That was 3 weeks. You can see here 22 days. These are just trading days, and this is the actual calendar days on this side. So basically 3 weeks under the top before it started to break out. And this was a very, very strong market at the time. You had the October low after there was an invasion in Israel, or basically missiles going from Iran to Israel. That was all through this period here, and more in particular this period in October. And the market basically went powered out really strong from that low. So for it to be held down for 3 weeks is a pretty big thing. Now, having a look back at previous signals as well, the 3 days down came in at the previous old all-time high. So that was January 2022, 3 days down, did not get a 3 days up, and then 10 months of a bear market. So basically all the way down from there. Now, these other times that I've got here with the arrows, you had 3 days down, and they were from all-time highs. You can see that this one came in a blue top, so you had a higher high on that bar and a lower low. So this green bar here was higher and lower on the same day, which is why it gets a blue diamond. Now you got 3 red days and 3 red diamonds, so lower highs, lower lows, but it was followed by 3 greens, so 3 higher highs and higher lows, and that basically wiped out the signal. Market went on from there. Another all-time high came in, 3 red triangles and 3 green triangles followed, basically wiping out the signal. Market went higher again. We can go back to the COVID pandemic. So this was the second round of COVID stuff. If you remember back in 2020, there was obviously COVID happened here. Then there was a scare of a second mutation. No one even talks about it anymore, but that was this period here in the market. 1, 2, 3 reds, red triangles, was not followed by 3 in a row, and the market basically continued on, double bottom, and then it finally broke out, taking 68 days to go from top to top. You also had the 3 red triangles from the previous old all-time high from that just before COVID broke out. 3 reds happened again. Market collapsed from that point, and the rest is history. It took another several months before it could break to a new all-time high from there. So there are several times where you can see the S&P 500 had the 3 red signals from significant tops, and it took quite some time for the market to come back from that. The only thing that reversed it very quickly, there might be some others in there, but the main thing we can see from at least this signal is that you had 3 green triangles that happened directly after the 3 red triangles. So that's going to be something that I'm going to look out for this time around over this coming week or two, mostly this coming week. And you want to see those 3 green triangles come back very quickly to invalidate this particular setup. Otherwise, we could find ourselves underneath this particular top, maybe for a month or two, like you can see from these previous signals. So that's the detail I wanted to show here. This is the major 3 red days down, or the 3 red triangles, the same signal that came up showing us at the peak of BTC. And of course, as I always do on the channel, I'll continue to follow up on that signal so that we can stay on top of the cycle happening for the S&P 500. Now, that same signal has not shown up on the NASDAQ. The top came in, red down, green up, and then you had the red days. It has to come directly from the top. So we're not too concerned here with the NASDAQ, although it can also still go through a correction because it might have an overbalance in price and time. So where does that leave us now, closing out the week? I think this is a better chart here. We're closing out pretty well above the 50% level. So here's the low to the high and above that 50% level. That's the important part I want to look at here. 63,600. What does that mean? Does that mean the low is in? That's the big question I want to put up to you and have a look at the data from the past. Now, this was one of the best buying opportunities this cycle. Obviously, that's the low, but it comes with risk. Trying to buy the low, do you know if that's going to be the low, or was that going to be the low, or was that going to be the low? You just don't know. But this low here, as we covered on the channel, and you guys that have subscribed remember that, there were several rules that Bitcoin met that were able to then identify that this was most likely going to be the low. Therefore, any of those significant dips on extreme fear, and March was extreme fear. It was the banking crisis. Everyone thought the market was going to collapse and we're going to go into a recession. But we bought that dip very heavily because it showed a lot of strength. You had the diagonal that it broke above. So here's the top to that line. On a log, it broke above it and then came back and retested. The market was getting towards the monthly swing tops, but it had also broken the monthly swing top in January. So you can see January took out that swing top and then got close to the next one. So it broke a monthly swing top. And the next thing was an overbalance in time and price. You wanted to see the market go up for longer and for longer in time and a higher in price as well. So basically a bigger move to the upside than what had happened previously. And so we're starting to see that occur now on almost each of these particular signals, but we need to wait until the week closes out tomorrow. So the overbalance in time and price, the diagonal is being broken and closed above at the moment, 24 hours, remember, and then also the monthly swing tops that it needs to take out. So it hasn't met all of the signals yet, but it's getting very close to those. Now it's also above the 50%. So this signal here was above 50%. You can see January closed above it, then February closed above it, and then March basically took off from there. Here is the 50%, right through the middle there, 63,600, potentially going to get a close above that level tomorrow. And this is the weekly here, so we're waiting on that to get a close above 63.6, so mark that one on your charts. That's going to be another really, really strong signal. So let's look at a few data points coming out of the bear market low of 2015. You can see how Bitcoin rose, corrected, then we would look at our 50% level. So you're not going to have all the data on the right-hand side. You're living through this in real time, right? There is the top, there is the bottom. Your 50% at $395. Watch the market come towards that 50%. There are a couple of closes above it. That is potentially telling us that there is some strength in this now and that the dips are to be bought. Is that going to be true? Okay, we keep going. A couple of closes underneath, but it puts in a higher low to the previous low and then pushes back above. Another higher low forms, so you can see right there. And the closes all begin to remain above 50%, buying up the dips, buying up the dips, buying up the dips. You don't get a close underneath 50% again, and before you know it, it's broken away. 519 on the next close, and the rest is history from that point. So you can keep doing this over and over again. Looking at the next peak, you get this significant correction. Here it is, there's the low. Look at how the weekly chart does not get any significant closes above that 50% level. Here is one, it was a few dollars above and then quickly closes underneath the level. Then it goes on another correction. Come back down. Watch how it plays ball with the 50% level almost exactly. So if you know how to use this, again, 50% level, it is going to dramatically change your trading and investing. Use it on a longer term time frame, a weekly chart, maybe even a monthly chart if that's how you want to play the game, and you'll be able to create better plans that suit your needs. You get the correction down to $750. Watch it come back, close above, and then no more closes below that level. Now I can keep doing this over and over and over again throughout the entire cycle, and then once you see the price break down from that 50% level and not able to put in more closes above it, things are beginning to change. That seasonality, that cycle is beginning to change, and now it's turned into a bear market. See how the market is not able to close above the 50% level and becomes weaker and weaker. That is a clear signal that you probably don't want to be getting into this market just yet. And what do you know? It collapses from there. So where are we at now with Bitcoin? Well, we're attempting to close above this 50% level. So as I said earlier, we could see it come back down, but what you want to see is a higher low form and then more weekly closes back above 63,650 bucks if you're looking at Kraken. And so once that continues to form and play out, then we've got a nice strong foundation forming. And I'd say that we're going to hit this sort of 4 to 6 month period and break out to the upside. Could this happen next week? Of course it could. It can continue blowing through the tops, and then we would get those signals that the market is well and truly on, a break out of the diagonal, a close above the 50%, a overbalance in time and price. So we got the price to the upside, and then time you need to do longer than this one here. So this was 5 weeks up, looking for that 5 weeks. And essentially it's game on again. And you've got that strength showing back up in Bitcoin. But tomorrow is going to be the real interesting close here. It's at 67,000 as I'm recording this. I'm going to be traveling tonight, so I won't be able to see it tomorrow until in the afternoon. But I'll be back on Tuesday to record you another update. There is your key number again, 63,650 for BTC. This is going to be the big one for this next stage. So 24 hours, keep a lookout for it. Let's have a look at Sol USD. Wow, 173. So we've now met the $165. That gives us another confirmation. And you can see the insurance premium here by the breakout is less emotional, meaning you don't have to go through those trader emotions. You've got more reassurance that the lows are in and that eventually the price will go higher on a time frame more or less like sort of weekly, monthly. Yes, you can still have a few days down here and there, but if you're trying to buy underneath these levels, like we saw, you could potentially buy a dip, comes back down, and buy the dip again, it comes back down, and that sort of creates a lot of emotional damage. If you're trying to be in this game long term, you want to avoid that emotional damage. As you guys might have already experienced, that can start to screw your trading. And if you're worn out now, imagine what happens when we go through another one of these. It's going to be very, very difficult to hold on for the ride because you are mentally drained from all these ups and downs at a time that it isn't even that important. So it's not that important while it's still trying to decide what it does, just as long as you keep watching the market daily so that you can act on your plans when those signals arise. That's your signal to hit the like button, subscribe to the channel.